What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and let's get straight into things. So hopefully you've watched yesterday's video. If not, definitely go check that out just so you have an idea of what I'm expecting from the week. And you'll see that we had quite a heavy down day on dollar, trading through the PD array, which I expected to hold price, and then reaching down into this bullish order block right here. So this isn't the end of the world. These things happen, and what you'll find is that although we traded through this PD array on dollar, we found that GBP went up in respect to the PD array we anticipated, and so did euro. So with that in mind, there is still a level of balance we have in that sense. It just means that dollar is more heavily weaker than we expected, which also means that when we are trading, we do need to be careful on the pairs because there might not be as much strength behind our moves as we're anticipating. So nonetheless, I am looking at this bullish order block because realistically the lowest I'd want to see price trade would be the 50% level, but looking at this, it's likely we are going to head a little bit deeper than that. So where could we be trading to? Well, we can simply look at an inversion fair value gap right here. So let's get that delineated first. I'm going to make this red. And the reason I'm highlighting this is because you can see how we've already traded into it and price left it nicely. So as far as I'm concerned, if we return to it, it should act as a bullish fair value gap on the daily, and I'm happy for price to tap into it if it needs to. This original range between this high and this low, which I draw our attention to, should now act bearishly. Why? Because it looks like we're going to close below it, and we're way past that 50% level. So if price returns back into it, which it likely will, that will be not short an opportunity, but it will be a point where I'd expect dollar to then turn in the new day. So maybe create the high within this range, and then trade on lower, running for what? Daily lows here and here. So let's get those daily lows delineated. South side liquidity there, and then we also have south side liquidity here as well. And then this is still a bullish order block. So although I'm looking at this whole range, technically this is a bullish order block, meaning that the open of this is still relevant to price. So we can draw that out as well, because price may want to tap into that and use that as its point where we'll get that reversal that we're waiting on. So let's go to the 4 hour, and you'll see quite interesting price action. We had displacement, a little bit of consolidation within this bearish bullish order block, which is a breaker. So you can see our price is wicking back and forth. But now I'm not anticipating price to really trade back into this range. If we do, again, I'm expecting rejection here because, you know, this is a rejection block, so it might wick above this 4 hour candle. But then I want to see it hit that 50% level and trade on lower for the rest of the day to head for that south side liquidity pool, especially since there's two lows and lows here. These are all relatively equal lows, so there's going to be a lot of liquidity residing below there. If we go to the 1 hour, you'll see I have my daily divider. This was the Sunday opening price, and you can see how much of a gap we've created. So this is a very large gap, and I am expecting price to eventually try and fill this in. So with that in mind, let's just delineate the gap completely. Where did we open? Here. So this is the opening gap, I believe. Let's check on the 15-minute. Yep. And what I'm going to do is I'm going to drag that through, because price is going to use that as like a bearish fair value gap throughout the week until we trade above it and use it bullishly. So moving into Tuesday, this supports our bias, because as price wicks into there, we're expecting what? Resistance, because as far as I'm concerned, it's looking for that south side first. And now we have a nice daily low here to target, and we have these relative equal lows below here to target, and then this was that inversion fair value gap range I'm talking about, where I'd want to see us hit. Any lower than that, I'd be a little bit suspicious, but generally speaking, I'm moving into Tuesday, I want to see us push on lower. So pretty simple. Pretty simple. Do excuse me, guys, I am quite ill right now. But yeah, nonetheless, moving into Tuesday, generally speaking, I'm looking for us to, you know, consolidate a little bit, maybe wick up, and then I want to see general just downwards price action. And you'll see we have high impact news with FOMC minutes at 2 o'clock. What happens at FOMC minutes is price just tends to run. So if we're still liaising around up here, then it's likely at FOMC minutes, then I'd want to see price start to drop significantly into these depths. However, what could also happen as an alternative is London offers us that low, so we might find that price is dropping quite suddenly. It gets down into these lows, FOMC minutes hits, and then we might have a complete reversal, and that's completely fine. And that's when it'll start targeting this opening range gap, because this is significant. So that's something to consider. But generally speaking, this is the very lowest I want to see us hit this week. Any lower than that, and I'm definitely not trading for the rest of the week. But if this stays intact, as in this is the lowest we hit, then I'm happy to be looking for trades on the pairs, obviously, and start thinking about the premium, which I still have my eye set on. So that's everything on dollar. I hope that all makes sense. Let's head over to GBP USD. We'll start here on the daily as well. And you'll see how we opened, not creating a low wick. So, there's a willingness to want to go higher. It's obviously in a rush. And it traded up towards this range, which I draw our attention to now. I believe this is a weekly wick. And I'm correct in that. So you can see how we're below that. So that should act bearishly. But obviously, if we're expecting dollar to drop a little bit more, we can also expect pound to want to push higher just a little bit more. And we can allow for that. So you can see how we rebalanced with this bearish order blocks low. So price doesn't necessarily have to take out Monday's high, but I'm anticipating again a level of rallying up into this range, this wicks range. So we need to allow for that. Where specifically? Well, this price action is disgusting first of all, but this bearish order block I do still like the look of. So I'm going to keep this delineated as we move into the new day. Let's go to the 1 hour. Because as far as I'm concerned, these highs are looking juicy, and then again, that's the original consolidation. So it'll be sensible in my eyes for price to want to come and try and grab those stops and then turn and start running for these lows. But generally speaking, this is heavy consolidation, not the cleanest price action whatsoever. But you have to be careful in times like these, because this is what you call time dilation, because it doesn't need to do all this. So when you remove this and you just look at what price is doing, it simply just came back down to a breaker, which is right here. You see these highs? If we drag that out, I believe we traded into that. Oh, we just avoided it. That's interesting. Not ideal. But nonetheless, I'm still looking at price like this. So we have an inversion gap here, tapping into it, and look how price is leaving it. If price continues to act like that, then I'm expecting these highs to get ran. And then as I said, this is a nice bearish order block up there. So there's reason for price to want to draw up there, assuming that dollar continues to behave and wants to trade on lower. Now let's say price doesn't and it drops below here. If it drops below here, then it's obviously going to run for our original sell side target, and that's fine. However, I probably wouldn't trade that. It's just a matter of me wanting to see a reaction away from here and allow price to start expanding to try and get up into premiums before we get to the latter part of the week when I'm expecting reversal. So yeah, we just gotta wait and see, obviously. But FOMC minutes does tend to be quite a messy one, so we just need to allow for price to do its thing, of course. But it does seem like you see this massive range right here, this imbalance. Look at how we traded in it. We're spending our time in it, we're filling it, so I'm expecting it to leave it eventually, and that's why I'm allowing for that for room for price to want to expand. So that's everything on pound. There's really not much more for me to say. Let me get my daily dividers up, actually. That will help. And we'll go here. There. And then there, and then this will be third. And if you've been watching me, you'll know how much I like my Sunday opening prices, because they're very significant to price. So let's get that delineated. And I like the fact that we're still above it. So long as we're hovering above this up until Wednesday, then we know that we can target this moving into Thursday and Friday. So again, we want to see continued support. It's just that Monday was very consolidated, but I do believe they're just simply accumulating, can distribute there, and then can start thinking about turning in the market. But yeah, just let price do its thing, really. There's not really much more to say. This is a massive opening gap as well, generally speaking, between here and here, and you can see how we're just clearly consolidating with inside it. So we just need to let it consolidate so that it can whip one side of the market to the Judas swing, as ICT calls it, and then come back on itself. So that's everything on pound. I hope that all makes sense. Let's head on to Euro USD to finish off. I'm going to start on the daily here as well, and you'll see how beautifully price delivered up into this bearish order block, just tapping into it. So again, I'm happy for price to tap it deeper into it. Very high, the very max I want to see it trade is going to be that midpoint I have delineated right here. Let's make it white. So I'm happy for price to keep trading into this bearish order block. This is what we call mean threshold. So I'm happy for price to trade into that. 25% level ideally, so let's get that delineated as well. And if we see any PD arrays on the low time frame, that will make it more likely of a higher likelihood PD array to trade to, or a lower hanging fruit, as ICT would say for us. So let's go like so, make that white, and then we'll go to the 4 hour. And then what you'll see, actually, let's go back to the daily real quick. As soon as we trade above this high, that makes this a bullish order block. It might not be the strongest, but this open is a bullish order block open. So we can use that on the 4 hour and 1 hour, because you see how price tapped into it. The fact that it's done that, I don't need to see price come back below this low. So again, this is more reason as I want to see, more reason as to why I want to see continued support, sponsorship. We can also use this wick now and draw it out. Because again, if price does dip back down in here, I want to use this as a point of accumulation to go long with the expectation to trade above these highs and then reach into our bearish order block from the higher time frame. But I don't want to see it spend much time up here. If it starts going up there and it's acting up and spending time around there, not ideal. But as far as I'm concerned, the fact that we traded back down into this daily bullish order block right here and we've left it now, I'm happy. I want to see that it's left it. So that's what I'm looking for. Let's go to the 1 hour. If it doesn't give it me, it is what it is. If it doesn't give it me, we'll see that price runs, and it runs fast straight to these lows. But I want to be, like I said, I want to see more manipulation ideally, especially with something like FOMC minutes coming up, because it will just throw people off. Relative equal highs up here, so there is liquidity residing in these premiums to redistribute, and then then it can start thinking about south side liquidity. So that's going to be everything on euro. Hope that all makes sense. Don't forget to watch yesterday's video if you haven't already, and you'll get an idea of what I'm expecting for the week as a whole. But yeah, thank you so much for watching. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, and I'll catch you tomorrow. Peace.